catching a nice bid up 194 or 1.11%.
And we don't often see really positive reactions to the Fed, but we're seeing that so far. Let's bring in Freedom Capital Markets Chief Global Strategist Jay Woods. Jay, the chase is on. I don't want to overplay it, but you think the chair is going to spoil the atmosphere here when he starts to talk, or reinforce it?
He's going to add some volatility to this market. Let's see what he says. You know, the one thing that struck me was the unemployment data. They didn't look at that as changing much. Growth went down. So there are going to be a lot of questions. And, you know, usually the first move is the wrong move, and the press conference gets volatile. Watch the last 30 minutes of the day for the true direction of what this market thinks of his comments.
And that said, bond markets, bond yields, whatever you want to say, started moving. But do you think that's because of what's happening with the balance sheet, or do you think that's just the fact that they said, yeah, core inflation is going to go up a little bit this year, but we would still be cutting rates? Yeah,
I think it has more to do with the latter than the former, but both do play an impact. The bonds didn't move much. Let's see what happens when he starts talking. The bond market has kind of had us scratching our heads for quite some time.
Thank you.
As Brian mentioned earlier, you know, mortgage rates go up when we cut 50 basis points, and people are expecting mortgage rates to come down. So it's going to be an interesting press conference. The dot plot to me was key, that they're still at 2 cuts till the end of the year. When they start, well, maybe we'll get a better idea after he talks.
But just for me, and I think you would agree with this, Jay, and I want all of our viewers and listeners, I know there's a lot of people that are kind of newish to the market because the markets have had such a big run the last couple of years. Crypto's brought some people in, maybe some new. By the way, welcome to everybody who may or may not be new out there. The Federal Reserve reserves the right to change its mind based on any data point at any time.
Yep. And you never know what's going to come down the pipe. You know, no one predicted COVID. Look how they had to change to that. I don't want to see them cutting rates because of some unforeseen problem. I want to see them cutting rates for the right reasons, and that would be inflation's under control. The dual mandate has been met. So right now, it seems like things are okay. We still have that tariff uncertainty. The market doesn't like uncertainty, and that's why we've been volatile these last few weeks.
But, Jay, you said something smart. I wrote a piece on Friday about how bad the consumer sentiment report was, and you were like, yeah, bring it on. When it gets this bad, it can't get a whole lot worse. And we saw at least a couple-day kind of fulcrum in markets where all of a sudden, I'm wondering if you're right. Do you think the bad news is priced in here and the economy will actually be stable? I don't mean to ask you as an economist, but how are you positioning as a trader?
Well, I'll tell you as a technician, it's a contrary indicator. When you see sentiment reach historical lows like we did, lowest level since September 2022. Guess when we bottomed? October 2022. So that to me was a sign, okay, maybe it's a little of a capitulation phase. And then when you look at it over the long term, we had our 3 lowest ratings of sentiment going back to when? 2009. That was a historic low. I don't know if this is a historic low, but when I see readings like that, I'll take the other side of that trade every time. But we do have a lot of volatility coming out of Washington. So one data point at a time. But I think this is a tradable bounce. And let's see if we can get back a little higher than here.
Does tech kind of go back into the leadership here, as we've seen a little bit over the past couple of sessions, or do you have to look elsewhere?
Well, no, I think tech should come back, at least lead from a trading point of view, considering that technology and discretionary, the 2 biggest sectors that usually lead us on these rallies, those Mag 7 names, have been lagging. You get a bounce, it's going to take the market higher with it, because under the surface, it hasn't been the worst market in the world. In fact, Friday and Monday, we had 90% upside days. So to me, that's strength, and usually that will lead us to at least a near-term rally.